Hi guys, I hope that I find you well today. In today's lesson, I want to do something very interesting and I want you to follow me so that you can really understand where I'm coming from and the reason for this video. In today's lesson, I'm going to teach on the earnings per share, the EPS. So I'm going to focus on the earnings per share. This is an extract from the NSC November for the year 2023. So in this paper, they did not require us to calculate the earnings per share, but it was given here. So we're going to do calculations to prove how to get this 66.2 cents. This video is prompted by what was done in some prelim papers, because when working through some prelim papers, for example, the Eastern Cape prelim paper, they did test on the earnings per share. And I think the Mpumalanga paper as well, there was testing on the earnings per share. And I'm not exactly sure if the calculations in the memorandum might be the right calculations. Hence, doing this video such that maybe I could shed some light in some of these areas. If you come to the formula sheet, which is always in the question paper, I want to encourage you not to over rely on the formula sheet, but to study your formulas, know your formulas by your fingertips, and not over rely on the formula sheet. The formula for the earnings per share must be this one here, all right, which says net profit after tax over the number of issued shares. And then it has this aspect now which says see information 3 below. And information 3 then says if there is a change in the number of issued shares during the financial year, the weighted average number of shares is used in this practice, which therefore means if the shares remain constant, I can use that particular number of shares that are given in the question. But if there's a change in the number of issued shares, therefore, I will use the weighted average number of shares. So we're going to do this particular question and we want to see how best should it be done. So first, I'm going to show you three methods. The two are going to be wrong and then the one is going to be correct. But in order for us to get to the correct one, we need to see what is wrong and we must not do the wrong things. So the first one I'm going to do, which is method A. I'm going to call it method A. Okay. So let's call it method A and let's start with our method A. All right. So here is our method A over here. We're going to take our net profit after tax. So I'm going to come in and say net profit after tax, which is 912,500 net profit after tax. And then I'm going to divide it by the number of shares in issue, which is the 1.2 million at the beginning then. All right. So I'm going to divide it by the 1.2 million. The 1.2 million is the number of shares here at the beginning. So I'm going to come in and divide this by 1.2 million. All right. And remember, you multiply by 100, your answer must be in cents. Let's see if we can get that calculator. There you are. All right. So it will be 912,500. And then we're going to divide this by 1.2. There is 1.2. All right. And then it will give us 76 cents. All right. So if I multiply this by 100, I'll end up with 76 cents. So here the answer will be 76 cents. 76 cents is not the correct answer because here we are given 66.2 cents. So it therefore means dividing it by the number of shares at the beginning is not the right way. Let's try. Second option, B. In B, we're going to try and divide our net profit after tax, which is 912,500. We're going to try and divide it by the number of shares at the end now. So we have 1.2 million shares at the beginning. We added 300, which gives us 1.5 million now. Are you still following? And then we subtract 90, which gives us 1,410,000, which is the shares now at the end. So in this second option, we're going to divide it by 1,410,000 shares, which is the shares at the end, multiply by 100 over 1. We want to see, could option B be the right way to do it? Okay, So I'll then say 912,500, and I divide that by 1,410,000. And then we would get 64.7. So even if I still multiply it by 100 cents and then 64.71 cents. Okay, so the answer here becomes 72 cents. Again, the answer that we're looking for is 66.2 cents. That means this option is still not correct, where you use the number of shares at the end. You cannot use the number of shares at the end, because the formula sheet has told us that once there is a change, an additional number of shares, a repurchase number of shares, we must use the weighted average number of shares. This might be the way that was used in some of the prelim papers. Please, when you do your Eastern Cape and when you do your Mpumalanga papers, just be watchful when you do the earnings per share calculations. All right, let's see if we try option C. Let's see if we try option C. Here is option C now. In option C, we're going to try and calculate the weighted average number of shares as the formula sheet prescribes us. So to calculate the weighted average number of shares now, what you say is you rely mostly on your dates. Look at your dates and you say from the 1st of March 2022, we had 1.2 million shares. And these shares change on 30 June. So it's from the 1st of March until 30 June. On this period, we had 1.2 million shares. With 1.2 million shares. And for how many months did we have this 1.2 million shares? We had it from March, April, May, June. So we had this number of shares for 4 over 12, 4 months. Okay, let's see, where is our adding machine? There you are. So we're going to say 1.2 million, all right, then multiply that by 4 over 12, like that, okay, by 4 over 12, and that's going to give us 400,000 shares. So here we're going to have 400,000 shares. This is 400,000 shares. Let's come to the next one now. And then from then, because we're getting to 30 June, that means from the 1st of July now, from the 1st of July in the year 2022, all right, until on the 1st of December, this is when new shares are being repurchased. So we're going to count until 30 November then here, until 30 November. So it's from the 1st of July until 30 November. All right. So how many shares are we having? We've added 300,000 shares. So it's 1.2 plus 300. That gives us 1,500,000 shares. So we have 1.5 million shares. We want to know how many months these were. So we would now say July, August, September, October, November. So that's 5 months. So 5 over 12. Let's see again our adding machine. So we'd say the number of shares is no longer 1.2, it's now 1.5, like that. And then we'd say multiply that now by our 5 over 12. And then that would give us 625,000 shares. So we'd come here and then we have 625,000 shares. You have 625,000 shares. Remember, this is the weighted average number of shares. This is the weighted average number of shares. And then lastly now, which is from the 1st of December here, from the 1st of December until the financial year end, which is 28th February, until the 28th of February. All right. And then how many shares are we having now? It's 1.5 minus 90, which is 1,410. 1,410. And then we multiply that. All right. So we're counting the number of months again. We are going to say, in terms of months, it's going to be from December, January, February. So it's 3 over 12 in this case. Multiply by 3 over 12. So let's go again to the adding machine. And then we'll say 1,410,000, like that, multiplied. And then we come here, then we say we multiply this by 3 over 12. And that will give you 352,500. 352,500 shares. Now I then add all my shares now. I'm now going to add all my shares over here, which is my, let me take it from the top so that I don't lose you. So it's going to be my 400,000 shares. There it is, 400,000 shares, plus my 625,000 shares, my 625,000 shares, and then I add my 352,500, my 352,500, and then I end up with 1,377,500 shares. Now, I'll then take now, so I now have my weighted average. I now have my weighted average number of shares, which is the 1,377,500. So I can now take my net profit after tax, which is my net profit after tax, remember here, which is 912,500. And then I divide it now by my 1,377,500. And then I multiply this by 100 over 1. Let's see how much I'm going to get. So I'll come here and then I'll say my net profit after tax, 912,500. And then we're going to divide that now by the 1,377,500. Are we good? All right. And then we are going to get that. Remember, if we multiply it by 100, and then we're going to get our 66.2. So I end up now with 66.2 cents, which is what we see over here. This is what we see over here. That therefore means when the NSE November 2023 paper was created, the examiner was able to calculate correctly the earnings per share, which we have proved with the weighted average method. So my question is, when you do other papers, please take heed. Watch out for the way in which earnings per share might be calculated. I've shown you option A, option B, and I've shown you the correct way, which is option C. Now, I want to show you another way of doing C again. Another way of doing C again. Let's see if there can be another way in which we can do C. Okay, so already now we know how to do C. There is another way that we can do C. Okay, let's see. So if I were to do C in another way, I would say my shares at the beginning, so I'm still sticking to my time frame. My shares at the beginning were 1.2 million, and I had them for 4 months. You remember that 4 here? I had them for 4 months. So I'll say multiply by 4. Okay, calculator. Let's see if you're still there. So I would say my 1.2 million multiply by 4, and that will give us 4.8 million. So here I would end up with my 4.8 million. Okay, so here I would end up with my 4.8 million here. Let me come to the next part. The next part, therefore, I have 1.5 million. My 1.5 million, and I had it for 6 months. 5 months rather, for 5 months. So it's 1.5 million. So it's 1.5 million. 1.5 million, and then I'm multiplying that by my 5 months, and then I'm going to end up with 7.5 million. So here it's going to be 7.5 million. And then the last one is going to be my 1,410,000, my 1,410,000, and then I had it for the 3 months. There you go. So I'm going to say, okay, let's go back to the calculator. There it is. It's 1,410,000. Then I'm going to multiply that by 3, like that. And then I get 4,230,000. So I get 4,230,000. And then again, we're going to add everything over here. Again, back to the calculator. So it's going to be 4.8 million here. That's 4.8 million. 4.8 million. Then I'm going to say plus 7.5 million. And then I'm going to say plus 4,230,000, like that. And then I'm going to end up with 16,530,000. So here it becomes 16,530,000. Then I take my 16,530,000 and then I divide it by 12. Okay, so I divide that by 12. Then I divide it by 12, and then I'll end up with the 1,377,500. So I come back here to the 1,377,500. There it is, 1,377,500. So I come back again to the weighted average number of shares. So I come back to the weighted average number of shares, which is what we had done over here. So there are two ways in which one could have done it. You could have done it this way, or you could have done it this way. It depends on how you prefer to do it. Okay, guys. So this was an explanation on how to calculate the earnings per share. Until next time, cheers. I'm out.